morning, investors. Nex Gen Dante here with you for the pre-market action. So we're going to talk about what happened yesterday and, the overall things that are going on in the market here, kind of how I feel like the sentiment is. Got some keys for us to look at for the rest of the week and how we're going to play out ending the month of March and going into April. I think things are going to get really interesting here. So let's talk about this. First, I want to say that the market looks like it's making a nice setup. And we'll get into this because I have two potential theories of what's going on. And we'll see that, first of all, that the market has widened a bit. The tech is being realigned with value. You can kind of see that bit with how Apple, when we had that last run up, Apple was leading the charge and it's still holding up relatively strong, as well as your other big tech names like Facebook even was running alongside the other big tech, like with Amazon. The FANG stocks were really all moving together on an update, and that's pretty interesting because Facebook usually moves counterintuitive to the market, but then it's kind of realigned itself back with all of tech, all the FANG stocks, and came down accordingly with everything else. We see that this market widening where the stocks that were Momo names are actually not getting much love. Like you got your Neo selling off, your Plug Power, Palantir. All these Momo names are not getting the same amount of love, and the ones that are holding up the market are the bigger cap stocks, tech stocks that are actually getting some love again. And so this brings me to two theories of what's possibly going on. It's first that the market is just waiting for economic data. Now we're going to have data soon about the unemployment numbers as well as inflation. And we can see that TLT is pretty much chilling out, like the bonds and everything. We have had a 5-day upstreak of the bonds now, just crawling back up here where the rates are going down. And so what this means is that if we can just chill at this level, or it comes up slightly and we're not moving too crazy up or down, the market can do its thing. It can consolidate and rearrange for what it wants to value. And that being said, I think that the reason why we're selling off, and we've seen the overall slow of assets being bought altogether across the board, because the market's kind of come together where values realign itself with tech a bit, where we're seeing the sell-off of not just tech but of value stocks as well. And so I think what we're expecting here is the market is expecting worse economic data. It's basically calling Powell's bluff from the other day, because he was saying there's nothing to be worried about. We don't but the market is saying that, hey, we think that you're bluffing. Yeah, you don't have that ace card up your sleeve, but we just need to wait for the cards to be played. We're in the final round of poker. Wait for the cards to be put on the table, and then we'll see what we're working with. And so I think the market is just overreacting, like it always tends to do, to news on the board here. You see that these times where we dipped down here to the 50 moving average, it was literally all on news that they just overreacted to. But what happens after a week or two? We forget about the news, or a news headline drops. We're like, oh wow, the economic data is not as bad as we thought it was. And then what ends up happening? We rally up to new highs. So we're gonna see if that keeps the trend here. Even if we come back down here, if we come back down to the 50 moving average here today, even at the 383s here, that could be a potential buy the dip opportunity. That being said, let me get into the second point of this. The second theory is that the dividend chasers are gone and value is overvalued. Now, how can value be overvalued? Well, if you take a look at your travel stocks like Carnival Cruise Line, and let's just look at like a yearly chart here, see that they've come up, quite a bit since the pandemic low numbers. They've bounced. And then if you look at your airlines, you see that they're coming up here. American Airlines is great. Recovery here halfway, but then you look at Alaska, and they were positive on the year at one point here, like a week ago. They were positive on the year. So not only did they gain back all the losses from COVID, right, they've actually gone up higher in their stock price compared to before the crash. Now, what does that mean? It means that people are buying these stocks up as if COVID never existed. These companies are making money like they were before. And then it's like, well, now it seems like, yes, these stocks look cheap because they've been beaten down by the pandemic, but let's not kid ourselves here. These companies are still losing millions of dollars every day. And so, what does that mean? It means that the market may be overvaluing value stocks. And this is just kind of lining up with the theory that Kathy Wood was saying, that the sell off on tech is overdone because tech growth stocks are the ones that actually have the potential for growth. The growth outlook on these value stocks is not the same. They don't have the same potential. And then, once the ex dividend days have been passed out, dividends have been handed out, like there's really no need to chase these stocks up for these dividends anymore. And so we can look for this trade to possibly reverse and see a stronger, the market will still be wider and like come up together, but we're going to see a stronger push for tech like we did last year, where the Dow components rose up slightly, but tech still took the lead, as we've been seeing in the past the past 2 weeks here, where tech is leading on the upside for all. So that being said, I want to get into the plays that we're looking at here potentially. So first thing is Disney. Now Disney, we had already positioned a play, called it out in the Discord, but we got crushed on that entry. I mean, crushed for some reason. Even though we had a value rotation the other day and a lot of value stocks were up, your HD, Caterpillar, Deere, and everything, for some reason the market did not count Disney as a value play. It really just followed tech. And it crashed down with the tech sell-off. Now this could be because of potential news that Disney is holding back the release of their movies, but I mean that could have accelerated. But it's been a pretty harsh sell-off overall the past couple days, where we've gone down about like 6%. However, we do see that Disney Plus prices are rising, and so what this means is then that we could compare this to last time when they mentioned that the prices were going to rise. They actually got a little pop. You can also see that another thing compares this to is Netflix too. When Netflix says that they were raising their prices, that's when we got this pop back here back in September. Netflix is raising their prices, and then that's when we got that run up. So we could potentially see that here happen with Disney, as well as looking at their levels here. We can look for a bounce over the 50-day moving average. So we look at the 50-day moving average, and we're coming right there below this line. We see that this has been a strong line to bounce off. No matter where it comes up to and holds up strong over the time, it finds itself peeling back towards the 50-day moving average. And then once it meets up from there, it'll usually bounce, and then we can get a strong movement upwards, even to all-time highs. And you can look at this kind of been the trend for the past year here. Every time it comes back down, then it kind of like it hovers around that area and then it shoots back up. So let's see if we can get that same kind of bounce, the same kind of momentum for the last 3 times that we're below the moving average in Disney. Next, we want to look at the SPY and the Qs. That's NASDAQ QQQ. But we're going to watch for the double dip and for the economic data to come out. So we should be getting economic data here in the next 2 weeks here. Coming into April, we're going to see, inflation data. We're going to see those unemployment numbers that Powell has been talking, stressed about. That was his most important factor that he's focusing on. So we're going to see those economic numbers and see what the economy is doing, because according to Powell, what he's saying is that TLT, with the bond yields going up or down, it's signaling that the economy is actually starting to recover, and that's according to his words, not mine. But we're still a long way, as he says, still a long way from full recovery. So that being said, the market could be pricing in very, very negative numbers that are going to be worse than expected. But if they come out better than expected, we could see the pop. So like we might be forming a head and shoulders on the QQQ here. So we could be coming back down. And this could be our double dip. So I was thinking that we'd come back down. We're not going to come back down to the 300s. I don't think that we're going to get that low, but I do see us testing 309 a little bit below, or maybe just holding the range around here in the low from ninth here, where we had 306 to come within potentially within 10% of that big low drop that we had at 297. And if we come down there, I think that's going to be our opportunity to buy if we get good economic numbers. But we're going to want to be careful. We're going to want to see those numbers and see how everything plays out. Same thing with the SPY as it comes down to the 50-day moving average. We're going to be able to see, do we get a bounce off those economic numbers. Next thing we're looking at is HD. HD has been killing it. I mean, Home Depot has been on a 2-week winning streak, just straight up every day, making all-time highs, closing at all-time highs. And what this means is that you just, again, follow the trend here. When this trend starts to break, that's when you get out. But I mean, as long as it's making consecutive all-time highs and consecutive higher closings, that trend can continue as far as they want to push the stock, because there's nothing holding it back. When there's no pain and everyone's just making money, that's when stocks fly. And then next we look at Nike, and along with other stocks like H&M and other companies, Gap, I think too, like they are getting crushed because of China's sanctions. So there's some sanctions going in China, and they're actually boycotting companies like Nike. So what this means here is that with this coming down here, I don't know how far it's going to drop. We're going to want to watch the levels here. The pre-market, we're already down at 126, which is lower than this level down here. But we want to pay attention to is how this news carries out. Is this something that accelerates into a downtrend on Nike, or is this going to be a buy the dip opportunity? Because the market is usually forgetful when it comes to things like this. I mean, they're pretty forgiving. I mean, at the end of the day, Nike is not that Chinese company, so them being backlash in China is pretty bad, I will say. But if the market gets over this, or new news develops where they're lighting up on sanctions, then we could see Nike jump right back up to retrace where it was, and we could fade that move entirely. And then also we're gonna watch travel stocks. As I said before, they're kind of looking like they're a little overvalued. And even so, they've had some pretty weak days. I mean, even yesterday, all these airlines like American Airlines was up like 5%, Carnival Cruise Lines was up 8%, but they ended up closing -9. They went from +8% to -1.9% closing on the day. So they're looking really weak in comparison to their strong run up that they've been having over the past few months here. So this may be where the trend starts to reverse, where tech and these value companies start to line back up again, and then we're going to see a divergence of which one's going to really take the lead. But I'm more on team tech here for reasons that I've stated earlier, that the valuation for these companies just isn't even there. I mean, nobody's even allowed to take cruises yet, so I mean that's that. And I'm looking more for on the growth side for tech companies that are going to actually be the future. But keeping that in mind, look for the bounce here. But I mean, it did look pretty weak overall, so the trend might be reversing. And then finally, looking at IWM, looking for a similar setup to Disney on the 50-day moving average. See if we bounce up from there, but also overall just to see if the market, if we get a wider market pull up, because if the economic data isn't as bad as it is, and we get the market rallying, what we'll see here is that it's pretty much going to bring up everything across the board. But IWM is the small caps ETF, so if the small caps start to get some love again, a little bit momentum, like in your Penn Gaming, your Plug Power, Caesars Entertainment, the big components that are just some of the big components that are in IWM, we're going to see this stock really bounce back, and this ETF can really move. I mean, it was down $5 on the day. This thing can move up $10 on the day on a good day. So it's going to be important to watch this one, because it could be very volatile. So we could play this either way. If this sell off accelerates, we could ride this stock all the way back down to 200. But even so, I think if we get back down to those levels, that's definitely going to be an opportunity to buy. This ETF has outperformed the S&P 500 and the Qs for a reason over the past year, and maybe the sentiment is changing, but I think this is bringing us one of the greatest opportunities to buy in on the low side. Just keep that in mind, but be careful. And that being said, guys, it looks like we're kind of selling off here, gapping down in the morning in the pre-market here. So look for it to come down to that EMA, the 50-day moving average, and we're gonna watch here to see if we get that double dip here, like I'm saying, and then when we actually get that economic data coming through next week, that we're actually gonna get that bounce. So just be careful, guys. Don't catch a falling knife here. We don't know how far everything's gonna fall, but just be prepared in your positions and stay diversified and have cash ready for times like these, because these buying opportunities, they always come around, but you know, you're gonna miss them if you don't have money on hand. So be careful, guys. I'll be with you here in the Discord today. We're looking for scalps. We're gonna look for momentum. Things might get crazy, but at the end of the day, the SPY really isn't down that much. I mean, if you look at the past like month chart, you can really see that honestly we haven't gone anywhere. Like if you could just draw a straight line through this, like we sideways, we came down, oh, we came on the other side of it, but then like right now we're still like on the bar line. Like we really haven't done anything this month. So just be careful. We have a long way to fall. There's also a lot of potential for upside. Just be prepared to play it either way. And with that being said, if you guys want more information about our plays, if you're not in the Discord and you want to join in, there's going to be a link below in the description for the nextgeninvestors.com. You can join in, catch our plays live. We'll be in live trading. I'm just going to be having a good time, making some money. Hope to see you guys there, and peace out.